This is Chad Stayskull, President of Eagle Wealth Management. I'm here with our educational economic update for November 2016. In this month's video, we're going to discuss some of the major headlines that influenced markets in October, and hopefully give you some insight into what it could mean for you as an investor. To keep our regulators happy and at bay, please stay tuned at the end for a required disclosure statement. So, I want to start this month's conversation with a topic that's on everyone's mind: the presidential election. I think we can all agree that this has already been an unusual election season. And then, in keeping with the ongoing surprises, on Friday, October 28th, FBI Director James Comey sent a letter to Congress indicating the agency would be reviewing more emails from Hillary Clinton. The markets have reacted to this curveball with increased volatility. The S&P 500 hit its lowest point since July. It was not until November 6th that FBI Director Comey relayed that they would not be opening up any new investigations, which sent the U.S. markets back up 2% the next day. But when looking past all the current volatility and we dig into October's markets, you'll see underlying data that is much more positive than the recent volatility and media hype would lead you to believe. In fact, at the same time that the markets were reacting to FBI's announcement, we also learned two important details that show the economy is growing: gross domestic product and consumer spending. First, gross domestic product, or GDP as you might have heard, beat expectations and had its biggest gain in 2 years. This result means that the economy is not only growing, but at a faster clip than most economists had predicted. Second, the most recent consumer spending report from September showed it had grown by 0.5% to reach an all-time new high. Personal income grew by 0.3% as well. In other words, people in the U.S. are earning and spending more money. This is good news for the economy. Now, I'm not saying that everything is perfect, but I agree with economist Brian Westbury's description of our current situation. We are in a plow horse economy. Unlike a racehorse, who is fast and flashy but can only maintain its speed for so long before breaking down, a plow horse plods along one step after another. The motion is slower and less exciting, but plow horses have stamina and strength that the faster brethren lack. So as we look forward, I expect this plow horse economy to keep moving along. The election will likely continue to cause some market volatility in the near term. But even less eventful elections also typically cause volatility, because markets simply do not like uncertainty. Remember, this economy is still continuing to grow. In fact, 86% of respondents to a recent CNBC poll believe the Federal Reserve will raise interest rates at their next meeting. Another strong indication that the Great Recession is getting farther away with each passing day. We might not have completely smooth ride ahead, but I believe we are still steadily moving in the right direction. I know headlines and media hype can be disconcerting, but as always, we're here to keep you informed and to share the information you need to hear to have a clear view of where we stand. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of November 2016. Please remember, nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, feel free to give us a call at 541-330-0220, and we'd be happy to talk to you. Now for that required disclosure. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or any solicitation for the purchase or sale of any security. Please consult with your financial professional before making any investment decisions. Take care.